Hey everyone, I wanted to go ahead and take a look at yesterday's trading session. I apologize I couldn't get a video out yesterday, but if we take a look at the trading session from yesterday, the bulls in the beginning early in the day continued their price advance. Price broke up above this candle and above the neckline, and also even challenged the daily high of this candle. Quickly got rejected, and towards the end of the day we had a steep sell-off, and prices ended up at the lower part of the day's trading range. That's a good rejection of the neckline here. We continue to have 2 bars of rejection, and if you compare with these bars here, you had rejection, the long wicks on the top showing that price was moving up but got pushed back down by the end of the day. So hopefully we'll continue to stay below this neckline here, and especially below this daily high here. What I don't want to see is for price to go ahead and start sliding along this downtrend line. I call that riding the rails, where if you imagine it's like a skateboarder or a skier just riding down the slope but not re-entering the channel. That will show that this line has become support, and eventually this will bounce off of support. What we want to see is the price to re-enter into the channel as quickly as possible. If we take a look at Apple, which due to its market capitalization will have a strong influence or a strong pressure on the indexes to the upside or to the downside, we had a break of the trend line here, downtrend line here, but we also had it re-entering the trend line yesterday. So this is kind of what we want to take a look at. Hopefully the SPY can do the same thing instead of just riding the rails. I think right now we are in a holding pattern. You can see the volume was not very heavy yesterday, but I think we're in a holding pattern. I think we're waiting for the FOMC meeting notes. Some are hoping this would be some sort of catalyst. In my opinion, I don't think there would be a real significant change in sentiment, because these are just notes from the previous meeting, and so any news that may have come out or have affected the market has already played out. So we'll have to see, but typically, events, people will hold off and look for the reaction before making their trades. And the other bigger catalyst will be earnings. It's projected that the S&P will report a negative year-over-year growth, and I think that could be enough catalyst for some more downside. So I think until we get a week into earnings, we might just be in some sort of holding pattern, and that's reflected in this chart here. If we take a different view of the chart, you can see here we're pretty much consolidating. We are at 208.84 would be resistance, and around 204.21 would be support. So even though we have a negative sentiment, we can see here there's a consolidation, and that's fine, that's normal. Just like when we are in an uptrend and it's consolidating before it continues higher, in a downtrend we could consolidate here before breaking down, going lower. So if we're in this trade already, it's good to know that we're consolidating, so that if we head back down into this area, it's a good opportunity to take some profits and then look for an opportunity to reshort at resistance above here. Now if you're not in this trade yet, you can short at this resistance level, or wait for confirmation by the breakdown of this support line. So that's something to keep in mind, your profit zones. If we're just going to bounce around here, go ahead and take profits when you can, because we don't know, the catalyst may be good, and head out. So you don't want to be in a trade and not have any sort of profit whatsoever. If you take some profit, you can at least get out with the break, set your break at cost and still come out with a profit. Another pattern that's playing out on the same chart is the descending triangle pattern you see here. Now someone asked me, what do all these patterns necessarily mean? Generally speaking, the patterns are areas of support and resistance, and price generally stays within that range until a catalyst pushes it down or up. So usually the trend line on the top will offer resistance, and the trend line on the bottom will offer support. So whether you have this descending triangle or an up channel or a down channel, the trend lines give you a clue as to where you should buy or sell. If you're touching the support line and you want to go long, this is where you would want to buy. If you want to short, this is where you would want to short, along this line here. Now, if you're in this area here and you're thinking about going long, you can see resistance is not too far away and your risk reward is not incredibly great. But if you buy along this area, your resistance is further up, you might have more upside. So that's just patterns in general. These lines just offer support and resistance, and they're sort of a guide for buying or selling. But in this particular case, we're in this triangle, we may have a few more days or of bouncing inside of this channel. We can look for a breakout between this area and the tip of the triangle, and this will bring us into, you know, middle of earnings. So I think bears are looking for additional catalysts to head lower. I think we have to be patient with this trade. As long as it doesn't break out to the upside above this high, we have to maintain our course. That's it for this video. If you found this video educational or you liked it, go ahead and click the like button. Or if you would like to subscribe to my channel, please click on the subscribe button below to get updates on future videos. That's it. Thanks for watching.